What's going on, everybody? Welcome back to the channel today. So we're talking about real estate 2021. Gonna give you guys 5 trends to watch out for as we go forth into 2021, so you guys can kind of set your mindset going in and look for the trends in your local area. And this all came from a report that I read with U.S. News, and it gave an outlook for real estate for the year. And of course, real estate is all local, so you definitely want to talk to your brokers, your real estate agents that you have there locally to understand the data that you're seeing with the time on market, the average sales price, and things like that. The amount of inventory, for the amount of months of inventory you guys have on the market to kind of understand if you're in a buyer or seller's market. All that. But today we're going to talk about it at a national level, real estate 2021. And the first point, interest rates are expected to remain low throughout the year, but increase gradually. So at the end of December of 2020, the national average interest rate was 2.7%. And right now the projection is that rates are going to gradually increase across 2021 up to 3.4%. At the end of 21. So as we roll out the vaccine, we see some jobs come back. Probably not all of them are going to come back. We're going to have to deal with unemployment for a while. But right now they're expecting the interest rates to go up to around 3.4%, which is still at a historically looking, 50, 60 years at a historically low level, which is good for real estate. That means you can get cheap debt on the properties that you buy. And that definitely impacts the next piece, which is the average home price, which goes into supply, demand. Some people are selling, some are buying. Not a lot of people are selling right now, and but a lot of the interest rate it drives a lot of demand. So that's the second piece going into 2021. That last year at the end of 20. Overall, the national level, there was a 7.6% growth in the average home price in the United States. And right now, at the end of 21, that they're looking at a 5.7% increase. So a little bit decrease from this year, but looking at where we are right now with the pandemic and everything, to still have a 5.7% average home price growth is still pretty good. And it lets you know that the housing train is still moving forward. And it's still picking up steam. It's not slowing down as fast as some think. And I think a lot of it goes into the third piece, which is the home inventory level. They're expecting home inventory to still remain low as we come out of this pandemic and go through 21. That they're not seeing a large influx of housing that's going to come onto the market, and there's still a lot of construction. Permits are going up. There's still a lot of new construction that's coming online, and even with the new construction, there's still there's going to be a deficit in regards to the level of supply that's needed. And number 4, home buyers are planning to still stay focused on suburbs. I don't think a lot of people are surprised by that with telecommuting, with the home office, homeschooling with kids, teleschooling at home, and so a lot of people need more space. They're looking to get out of the cities to be more local in the suburbs. And a lot of people are choosing to maybe refinance because rates are low and not necessarily move to other houses, just depending on your situation, where some they're definitely looking to leave the city. And some may look to get a bigger house, whereas they now, hey, you probably want a home office, maybe 2 home offices. If both husband and wife are working from home remotely, then may need to have 2 offices. Kids need a space, whether their room or somewhere else, to do their school work, and so people are looking for a little bit more space. And so there's a lot of changes that's happening simultaneously, and there is still some flux in regards to jobs, security when it comes to different people. So a lot of that it impacts whether or not people want to move. Whether they want to stay put, kind of see how things play out, and maybe we may see people delay some of these transactions or decisions until the second half of the year, around the June, early summer time frame, to just see how things mature with the vaccine, the rollout, COVID cases, whether have a job or whether their job's relocating, if they're going to stay remote. Things like that are all decisions that people have to make in order to decide, hey, do I need to relocate out of this neighborhood? or am I going to relocate out of state? And I think that's something that we'll have to manage and see on the local level, to kind of understand the dynamic of the workforce there and just any industries that's leaving. Of course, there's a mass decline in population in cities and states. Well, states like California uh, is right there with New York and Illinois, are kind of the top three. Some of the data I was seeing earlier this week, that the trends were negative in those areas. And a lot of people are moving to states like in the Southeast, Texas, Florida. You have Arizona, the Carolinas, and so states like that, and Georgia as well too. States that we're looking about multifamily in some of these Southeast states, but the New Yorks, the Illinois, and the California are losing a lot of population. A lot of people are moving, and so that's going to definitely have an impact on those housing markets. Whereas that you probably see influx of supply, and if you're oversupplied, then of course we all know that the housing prices are eventually going to come down and they're going to lower. And so that's why, real estate is good to look at these trends on the national level. Overall, it's positive, but you got to dig in and look at the local level. When you start looking at, hey, what's the big picture of real estate in 2021, you got to focus in on the trends for your local area that you actually care about and understand the dynamics that's going on at that lower city level or MSA level, depending on how broad a reach you're looking at, to make your decisions. And as a real estate investor, you have to do your due diligence. You got to understand the market that you're operating in, and because it's all cyclical. You got to understand where you are in the cycle. You got to understand if you're in the seller's market or in the buyer's market, and what does that mean? Hey, or if you're still looking at your strategy for fixing and flipping, you may want to stay out of the high end, because we all know that a lot of times the high end real estate is the first one to kind of sees the slowdown, whereas that buyers at that high end kind of scale back, and you start seeing houses sit on the market for a lot longer than they normally sit on the market, and eventually the prices are starting to be reduced. And so if you're looking to flip, then you may want to stay around the average or the median home price in your area that you're working in, whereas that you have a larger pool of buyers in order to buy your product, which is the flipped house that you have. Or, if you're buying whole, you want to be looking at the renter piece, and that kind of goes into number 5, which is the last point that I wanted to make. When we're looking at real estate in 2021, is that some renters are still going to be hurt financially by the pandemic, and they're going to continue to struggle as we move into 2021. And I think we already recognized, Congress recognized that rental assistance was going to be needed. In the bill they just recently here passed, they set aside $25 billion for rental assistance programs, and which was a good thing. It was definitely needed. I would say for the collection that, with our apartment that we manage, that we did have some individuals in the apartment that they struggled. They lost jobs, and, hours cut back, and had to pick up second jobs in order to make ends meet and to work through. I will say for the month of December, we had a 94% collection rate, which was good. That was outstanding. That things are turning around for our tenant base there in the apartment unit. But there's a lot of people financially that's hurting. If you look at the unemployment numbers week in, week out, I think here for the last couple of months, they've been averaging a little bit over 800,000 per week that new applications for unemployment benefits. So there's a lot of people that's without work. You guys can see it across your communities, whereas that restaurants that were there that are no longer open, other businesses that were impacted by the pandemic that they haven't come back and returned yet. And so we're going to see a lot of that in our areas as we go forward. And so a lot of the people, as you see with whether it's the tourist industry or the essential workers, that a lot of the people who lost jobs, that they were on the lower income spectrum, and unfortunately they are the ones that are being hurt by the lost hours, work hours, lost jobs, and they're going to need assistance in order to pay rent. And I think it was overdue, and I think there's one of the things that we'll see how the program rolls out with the rental assistance. But I think there's a give take, whereas that the landlord is involved, the local housing authority, as it was explained to me, and then the tenant. Whereas that it's not all going to the tenant. The tenant has to fill out paperwork that goes to the housing authority that actually verifies however they do, and the payment gets turned over to the landlord. Because for one side that doesn't get a lot of press on the renter side with the eviction moratoriums is the landlord. Like the landlord depends on the monthly income to make renovations to the apartment complex, to pay the mortgage, the insurance, the taxes, to the upkeep to it. So there's a lot that goes into it. Whereas that paying the water bill, if it's all on common water, things like that, taking the trash being taken out. So all of that is paid for by the rents, and whereas that you have a large vacancy or the collection rate drops significantly, then the landlord can't cover all those expenses, and unfortunately, then you start seeing neglection of the property and just all the issues that come with it when you have a lot of people that can't pay, and so it impacts the actual building, the asset itself. So I'm glad that they got that right. That it's a give take, and it's a team approach. Whereas that all landlords are not slumlords, and all tenants, just because you're a renter, you're not a bad person. And it's a team approach, and you have to work together. And I know that we definitely work with all our tenants, through this challenge, as we went through 2020 with the pandemic. And I think going forward that there's going to have to be a lot of teamwork in order for both sides, for the tenant base, renters, and for the owners, in order to facilitate this to help people get through. And I think it's definitely needed. It's a good thing. And so just talking and looking at real estate 2021, not a whole lot of wholesale change. There's nothing drastic. Some people talked about, hey, are we going to see levels of '08, whereas there a lot of significant job loss, a huge unemployment percentage of the population. And I don't think we're seeing that. We're actually seeing real estate, with the price of real estate going up. Not as much as 2020, which was still shocked a lot of people with, they thought that the housing market was going to slow down. And it's slowing a little bit, but not a lot. There's still not a lot of supply on the market for various reasons. And construction won't be able to make up the difference here in just only 1 year. And the trend with moving out of the inner cities back out to the suburbs, that's continuing to go. It was in motion a little bit before COVID hit, but it's been somewhat accelerated now. And just the whole dynamic of jobs, and you don't necessarily have to live in the same area for the company that you work, as we see with Silicon Valley, and a lot of tech jobs allowing their workers to live wherever, and remote work. So a lot of changes happening in real estate in 2021, but not a lot. I encourage you guys to definitely dig in on the local level. Get out there in the streets, network with other real estate agents, brokers, investors, your contractors, whoever it is on your team you need to be talking with, and just kind of see, hey, what are they seeing, from their level of transactions that they're doing in the real estate space, and and put the data together. So, we wanted to run through those those kind of high level metrics or areas that you can see in 2021, and as you're looking at just the real estate across the portfolio, your own portfolio, kind of keep that in the back of your mind as you go through this year. We're kind of understanding, hey, where your average home price, for is the growth in the price, the level of supply in your market, whether you're in a seller or buyer's market, hey, what jobs are coming back, all those kind of things. As a savvy real estate investor, you want to keep those in the forefront of your mind as you make your decisions on, hey, should we start looking at doing the BRRRR strategy instead of fixing and flipping? Let's hold some of these and turn them into rentals. And with the BRRRR, buy, renovate, rent, refinance, and then repeat it. And we'll talk a little bit more about those strategies. But really, the big push for this video was just to talk about real estate 2021, and let you guys kind of know, hey, this is what the high strategic level for the U.S. real estate market, what it is. So you guys kind of have that in the back of your mind as you're going through, and kind of can have some context when you're looking at your local area, because every market is going to be different, and these numbers are at a high level, but real estate is super local and super focused. And so as we go through and look at how we're doing deals in 2021, and our different strategies in 2021, there's going to be a lot of opportunity out there. And the more we know our farm area, we know our backyard, the better off we'll be as investors and being able to network with other investors and provide value to the end clients. Whether you're buying, whoever you're buying the house from, to whoever you're selling the house or renting the house to kind of know the dynamic of the situation and the climate and economic climate that you're in as you go through and broker those transactions. As always, we encourage you guys to make sure you hit the subscribe button and like the video, hit the thumbs up, and drop a comment below on kind of where you are, what market you guys are in. Always looking to see, with the viewers, what market you guys are in, and whether you're an active investor, passive investor, drop that in the comments. So we're always looking to network and partner up with JV on deals. If you're in the right market, you're in a good market. We're bullish on North Carolina, Georgia, and in the Hampton Roads, Virginia area as well too. So definitely feel free to reach out and continue to follow and share the video. And I will see you guys later on this week on the next one.